morning, everyone. Welcome to an episode of the Mizuho Week Ahead. I'm Boon Heng, market economist at Mizuho Bank. This week's theme is Fragility questioned. Last week, the recovery in risk sentiment is somewhat fragile, reflecting mixed economic data, unable to signal clear policy paths ahead. In the US, weaker than expected ISM manufacturing and ADP employment print then the risk moved in the early half of last week, before a better than expected ISM services print and lowered initial jobless claims aided a firmer recovery. The lower initial jobless claims is also questionable, given the volatility surrounding the Thanksgiving week. In Australia, the undershooting of Q3 GDP was quickly faded as underlying details of firmer consumption in Q3, followed by stronger than expected household spending, indicator for October, implies that growth remains on track. Consequently, rate cut bets have now turned into rate hike bets, enabling the Aussie dollar to outperform in the G10 space. Aside from the Aussie dollar, the yen was the other outperformer, though gains remained very much in the realm of calling back substantial losses in the previous weeks. The gains were enabled by BOJ Governor Ueda, who signaled that a rate hike in December remained very much on the table. At the other end, in India, as we had expected, the RBI proceeded with a 25 basis point rate cut as lower inflation was seen to be tilting the balance of risk towards supporting growth. Furthermore, the RBI announced measures to ensure ample liquidity via open market purchases of up to 1 trillion rupee. For the week ahead, the main event will be the FOMC meeting in the middle of the week, and this may end up to be a hawkish insurance cut, with markets pricing in near absolute certainty of a cut. This could end up with the buy the rumor, sell the fact dynamics, which buoys the dollar and USD yields, especially if the dot plot and rhetoric shape the perception of this meeting being a late-stage risk management cut. Elsewhere, we expect the RBA this week to hold policy rates at their upcoming meeting, amid the robust economic recovery and inflation, which is likely to hover above their target range in the months ahead. For the tone of the meeting, Governor Bullock may be tempted to keep the doors open for a rate hike, which would enable a firmer Aussie dollar consolidation. Nonetheless, our view is that the bar for hike remains high and would require a confluence of factors ranging from stronger labor market and household spending, as well as risks of a property price growth which spills over to sticky rent inflation. Meanwhile, in the Philippines, the BSP is likely to cut policy rate by 25 basis points this week to provide some interim support amid private consumption weakness, while awaiting government spending to recover in the wake of the restrictions imposed by the fallout of the flood control project scandal. The peso will likely remain in a fragile state, even as supportive year-end inflows dampen depreciation pressures. All in, as we head into FOMC, even as the Fed may be inclined to cut rates, the lack of evident fragility in the summary of projections may instead reveal the EM Asia FX fragilities, especially for central banks attempting to provide more support to growth. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.